Hello everybody, this is AK. I'm back. So I know that there are quite a few people who are worried about interest rates peaking and how that might affect the performance of DBS, OCBC and UOB. And I also said in a video that some people actually sold all or most of their investments in the local banks in an anticipation of their net interest margins taking a hit from lowering of interest rates. And logically, stock prices should come down as well, right? And but of course, we have seen very strong performance by our local banks, and stock prices have been defying gravity, and quite a few of these people who sold or still waiting on the sidelines felt a bit of FOMO and wanted to get back in. And I made videos on some FOMO prices that we could look at, and I'll leave links to those videos in the description box below in case you did not see those. And why am I not worried about the local banks? And I've said many times before that the local banks have shown their ability and willingness to pay out dividends, meaningful dividends, during good and bad times, right? This is because our banks are well capitalized and well run, right? And during the pandemic, they could have paid out more in dividends, but MAS, Monetary Authority of Singapore, told them to reduce the dividend payout to be prudent in case they have to support businesses, right, which were going through difficult times, right? So I'm not worried, I keep saying this, I'm not worried about the local banks. They pay out a fraction of their earnings as dividends. They retain 40 to 50% of their earnings. So that's retained earnings. And these investments become more valuable over time because of these retained earnings, right? And in the meantime, we, as investors for income, we get paid like 6% per annum, right, in dividend yield. What's not to like, right? Strong business, good numbers, and you still get paid 6% per annum in dividend yield, even at today's prices, right? But like I said, prices being one thing, right? And if we are always looking at prices and worried about prices, then best not to invest, because I think we are poor candidates for investors. You are always concerned and looking at prices. But of course, we don't want to pay a price too high. That is for sure, right? So that is when we have to look at valuations. We look at valuations, right? So today we will look at UOB, because I think we talked about OCBC and DBS in great detail in a couple of past videos, recent past. So today we'll look at UOB and look at the valuation, right? UOB today is trading at undemanding valuations. You're talking about a P/E ratio of about 8 times. It's trading at about 1.1 times book value, right? And it's trading at about 6% dividend yield, right? So, and that's when they only pay out like 50% of their earnings as dividends. Imagine if they were to pay out 100% of their earnings as dividends, which won't happen. But if they could do that, it's like 12% dividend yield, which beats all the real estate investment trusts, all the REITs flat, right? So that's another reason why I have very little incentive to increase my investment in any REITs, despite what some analysts might say, interest rates coming down and it's a good time to get back into REITs. And I see very little reason why to increase my investment in REITs when I can get this kind of returns from investing in DBS, OCBC and UOB, right? So, and I made videos on REITs before about yield expansion and about when I'll increase my investment in REITs, and I'll leave links to those videos in the description box below in case you did not see those. That it's not now, right? It's not now. I mean, 5% dividend yield, distribution yield from REITs is not attractive to me. Even 6% distribution yield is not attractive to me, bearing in mind that they pay out all their income, distributable income, or 90% of distributable income, to give that kind of percentages, right? And you know, if you're talking about Parkway Life REIT, I know it's a very strange, it's a market darling for REIT investors. You know, like 4% distribution yield, I mean, forget it. You know, forget it. You pay out 90% to 100% of your income. You remember, it's income and not earnings, and that's the kind of yield you get. It's not interesting to me at all, right? And you know, and in today's business times, you know, I read the business times. Regular readers will know that UOB says that it's planning to double its private wealth assets under management in the next couple of years, and that because there'll be increased wealth inflows into Singapore, right? And Singapore is really it has strong and stable currency. You have a stable and clean government, and let's not talk about Iswaran now, okay? Generally stable and clean government, and so we are a magnet for wealth, right? So we are seen as a place to store and preserve wealth for high net worth individuals, and definitely ultra high net worth individuals as well. So total assets under management at UOB, which is of course the third largest lender in Southeast Asia, increased, right? And private wealth clients, you know, those who are very rich people with investable wealth at least 2 million Singapore dollars, right? They account for more than half of that asset under management, right? So there's increased wealth flow into the ASEAN region and definitely within Singapore, right? And UOB says that there's strong growth momentum in the wealth management space. So this is one reason why I say, even though interest rates have peaked, all right, that's not the only growth engine for our local banks, right? Thanks to Singapore's reputation and the strong Sing dollar, right? So, and of course UOB, I said during Evening with AK and Friends last year that because it bought Citibank's Southeast Asia retail business in 2022 for 5 billion Sing dollars. At the time, was a lot of money. And then we remember that the CET1 ratio actually dipped down to below 13%, but it's now back up, right? Which shows how retained earnings are very important for the banks. And UOB is now stronger than ever, right? It's place for growth. I mean, it bears reiterating that I'm not worried about our local banks, and I'm staying invested, and I'm looking forward to adding to my investments whenever Mr. Market goes into a depression, right? So the money that I got from selling a substantial portion of my investment in Sabana REIT recently, like I said in yesterday's video, all right, my war chest got a boost. It will go to investing in the local banks when there should be an opportunity, right? It comes knocking on my door, right? So that's all for today's video. If AK can talk to himself, so can you. Bye bye.